Hey everybody, today we're talking about something that's been shaking up the crypto world, a blockchain that many experts once said could never exist, a network that quietly solved what others called the impossible trilemma, achieving true decentralization, high scalability, and bulletproof security all at once. But what's even more shocking is what's happening behind the scenes, something involving a single wallet holding more than 4.1% of the total circulating supply, a secret discussion that's been going on for almost 2 years, and a whale who just moved 15 million tokens in a way that has the entire community asking questions. If you think you already understand what's really happening with this project, think again. Because by the end of this video, your view of Kaspa and what it represents for the future of blockchain might never be the same. This video is for educational purposes only. It is not financial advice. Always do your own research before investing in crypto. Let's start with the fundamentals. Kaspa isn't just another proof-of-work blockchain trying to ride Bitcoin's wave. It's a network built on years of scientific research, real-world testing, and uncompromising principles of decentralization. As of now, Kaspa runs with over 620-plus publicly visible nodes spread across the world. Each one adds strength to the network, another layer of defense against censorship, another guarantee that no central authority can manipulate or take it down. This isn't just proof of work. This is proof of work perfected, the kind of design that shows what happens when people focus on engineering, not marketing. The minds behind Kaspa, Yonatan Sampolinsky and Aviv Zohar, didn't just publish theories. Their research has been cited by some of the most respected names in the crypto industry, including major projects sitting comfortably in the top 10 like Cardano and XRP, along with dozens more across the top 50. They didn't chase hype or shortcuts. They spent years solving what others said couldn't be done. The trilemma that forces most blockchains to choose between scalability, security, and decentralization. Kaspa doesn't choose. It delivers all three, without compromise. Now let's address the mystery that's had the community buzzing. At the top of Kaspa's rich list sits a wallet, the number one holder, containing more than 1.1 billion KAS, or roughly 4.1% of the total circulating supply. For months, rumors circulated claiming it belonged to Binance. But recent confirmations from multiple independent sources say otherwise. It's not Binance. A well-known figure in the Kaspa community named Wolfie revealed something that makes this even more interesting. Getting listed on Binance would have required Kaspa to give up 3% of its total token supply as a listing fee. But the top wallet holds significantly more, over 4.1%. The numbers simply don't match up. So if it isn't Binance's wallet, what is it? Some are calling it bearish, assuming the worst, that this wallet represents concentration and manipulation. But that assumption might be missing the bigger picture. Because there's a real possibility that this belongs to a market-making firm like Wintermute, which works behind the scenes with multiple exchanges, including Binance, to provide liquidity and stability across markets. These players move massive amounts of tokens not to dump them, but to balance liquidity and maintain market health. Now let's talk about the hot-button issue, exchange listings. Everyone wants that magical Binance moment, the kind of listing that sends prices soaring overnight. But the truth is, paying for a listing right now could hurt Kaspa far more than it helps. Think about it. The broader crypto market is in a fragile state. Trading volume is down, retail interest is low, and investors are hesitant. Launching on Binance during a quiet market would be like hosting a huge celebration when no one can afford the tickets. Kaspa's team seems to understand that patience matters more than headlines. Reports from community discussions suggest that Binance and Kaspa have been in contact for nearly 2 years, not as a rumor, but as a long-term negotiation. Binance isn't ignoring Kaspa. They're watching, evaluating, and waiting for the perfect time. Because when they move, it will be strategic, not impulsive. So while many panic over wallet movements and speculate about hidden motives, the real story is unfolding quietly, and it's one of preparation, not panic. Let's look deeper at what's happening on-chain. One large holder, currently ranked 14th among all Kaspa wallets, recently made some surprising moves. This wallet sent around 8.6 million Kas to Gate.io, then soon after received more than 15 million Kas through multiple transfers coming from MEXC. At first glance, that might look like random movement, but in reality, it's a calculated reshuffle, a way of consolidating positions, optimizing liquidity, and preparing for something bigger. While retail traders panic or chase rumors, smart money is repositioning, quietly accumulating when the market is uncertain. That's usually a signal of confidence, not fear. Here's where things get personal. When I recently sent 51,000 Kas from one wallet to another, the transaction cost was less than a single Kaspa, and it confirmed almost instantly. The only delay came from the exchange's internal checks, not the network itself. Think about what that really means. We live in a world where Visa and MasterCard charge merchants up to 3% per transaction, where international transfers take days and charge outrageous fees, and where banks make money off your money, even when you're just trying to move it. Kaspa turns that system upside down. It allows value to move faster than you can refresh your screen, and for almost zero cost. That's not just innovation, that's disruption. And that's exactly why traditional financial institutions are in no rush to embrace it. Because if people truly understood how fast, cheap, and open value transfer could be, banks and payment processors would lose their monopoly overnight. What happens when individuals no longer need middlemen? When people can send or store wealth without permission, without friction, and without interference? Kaspa represents that shift. It's the first crack in a financial wall that's been standing for centuries. Make no mistake, the current system isn't prepared for what Kaspa symbolizes. It's not just another blockchain. It's a glimpse into a post-bank future where wealth can move as freely as information. And yet, the irony is painful. While institutions cling to old systems and most retail investors chase hype coins, a project built purely on fairness, decentralization, and transparency quietly evolves in the background, ignored by those who should be paying the most attention. In a market full of manipulated narratives and centralized control, Kaspa stands out as something untainted, something that refuses to compromise. It's like watching early Bitcoin all over again, except this time it's faster, cleaner, and more efficient. So, what's the takeaway here? The wallet mystery, the exchange listing rumors, the whale transactions, all of it points to one simple truth. Kaspa is still in its accumulation phase, and the smartest players are already positioning themselves. This isn't about hype, it's about fundamentals. Kaspa has achieved what most projects only dream of, a decentralized, scalable, secure network that functions in real time and at virtually no cost. When the timing aligns and the world finally catches up, it won't just be another listing or another pump. It'll be a moment that changes how the entire crypto community views what a blockchain can be. Kaspa isn't just solving the trilemma, it's redefining what's possible. And the best part? It's doing it quietly, right under everyone's nose. Thanks for watching. Like the video, drop your thoughts in the comments, and hit subscribe if you want more real-time updates, moves, market trends, and hidden gems.